Financing the dream home might seem difficult, but don't worry. If you have any query related to home finance, whether it's about interest rates, repayment strategies, tax deductions available for your home loan, or even the basic of just how to get that money together, you've tuned into the right show. Hello and welcome to Magicbricks Now. You are watching Property Hotline. I'm Kavita Krishnan. Today we are answering questions on home finance with our special guest Kartik Jhaveri. Now Kartik is the founder and director at Transcend Consulting India Private Limited. He joins me in the Low Parel studio. Kartik, welcome to the show.
Thank you.
Kartik, let's get started. We have Ganesh who's called in from Bangalore. How can we help you, Ganesh?
Good evening, Kavita and Kartik.
Hi.
Good evening.
So this show is absolutely fantastic. I really love your show.
Thank you so much. Tell us, how can we help you?
Yeah, basically my question is pretty simple, I think, for you. I recently shifted my home loan transferred my home loan from Axis Bank to SBI, and property insurance is a mandatory requirement in SBI. So the outstanding loan amount is 30 lakhs and the value of the property is now around 83 to 85 lakhs. So should I be insuring, which will be the wise decision to make here, like getting a property insurance for 85 lakhs or for 30 lakhs?
Okay. So he wants to know whether he should get an insure the outstanding on the loan, essentially, or should he just insure the property value?
Yes, so Ganesh, you're absolutely right. This is necessary. Most of the lenders will insist on this. And from an SBI perspective, 30 lakhs is obviously the most natural sort of answer, that let's cover yourself for 30 lakhs. However, there is, of course, a clause where it says that, if you want to have an insurance, the bank cannot really force you to take the insurance that they are recommending, which means that you can actually buy a term cover from the insurer of your choice, and if you like, you could actually assign that policy in the favor of the funding institution, which is SBI in your case. So obviously their risk is covered. So God forbid if something happened to you, their loan will not go into an NPA or anything of that sort. So you can do that, and while you are doing that, you can obviously do some other financial planning and maybe cover multiple goals by taking a cover of 50 lakhs or 80 lakhs or 100 lakhs based on one, A, your affordability, and B, the actual need that you have for life insurance. So based on that, you could actually do 2 or 3 items from just a single insurance policy. So you don't have to buy it through SBI if that is what they're insisting, but you can definitely buy it from outside, and that's what I suggest you do.
Right, so that's your answer there, Ganesh. Ideally buy it from outside. Go around, shop for the best possible insurance policy that you can get. You need not buy it from SBI. All that SBI wants is that you have an insurance which will, cover their risk. That's all that they are asking for. So if you can show an insurance, I don't think the bank also should have a problem. Also, one more thing before we move on over here.
Right.
Tell me this: if you buy an insurance policy from a bank, vis-a-vis buying an insurance policy from outside, which works out cheaper?
You see, typically the one that you'll be buying through the bank should be cheaper because it's a decreasing term plan. So now this is only in principle, because every year the way your principal is moving down, the sum assured also in that policy is in some sense moving down. So it should be technically cheaper, but that's not really the rule of thumb. It could be different. My personal opinion is always that if you go to your own policy, then you can really do your planning in the way you want. So if let's say if your financial planning need says that your life insurance needs to be 2 crores, and if you're buying a house by which you need to get an additional 50 lakhs of cover, you do it. When your assets go up, you can choose to not have that cover. So, you have a lot of flexibility and levers in your hand if you do your own planning with the vis-a-vis life insurance.
But if I do have all my insurance in place, say I've done all my insurance,
right,
and then I'm going and buying a home on a home loan, then it doesn't make a difference if I were to take the insurance given by the
and
bank,
if the bank or the funding institution wants any sort of additional cover, you could always endorse, or what is known as assign, the policy in their favor. So it's a little assignment form, it's a little procedure to follow, and on your policy certificate there is a stamp of the insurance company which says that this policy proceeds have been assigned to XYZ bank or NBFC till the time it is revoked.
Right. So Kartik, I can do this with an existing policy
Absolutely.
as well.
Absolutely.
Okay. So that's something that you need to keep in mind as a home buyer. If you're well insured, if you're sufficiently insured, you can actually use your existing insurance policy to cover your home loan. Also, you need not buy an insurance policy from the bank where you're taking a home loan from. The better thing to do would be to take a term policy, use it to cover a couple of more financial goals. That way, you are covering your home loan. You're also covering, certain other aspects, certain other things that you have in mind. So you stay well insured. So you need to keep that in mind, and also do a bit of shopping for a good insurance policy, and then decide whether or not you want to take the one that the bank is selling to you. Moving on to an email query now. Keval has written in from Rajkot. Now, Keval wants to know what is the maximum loan available for a person earning 2.5 lakh rupees per annum. He also asks on what value of the property are loans sanctioned and what is the minimum rate of interest that banks offer. He also wants to know why people with lower salaries get a lower loan amount. That's typically because you can pay a lower EMI. But having said that, this is a very home loan 101 kind of question, Kartik.
Absolutely.
If you can also give us, elaborate on how much of your salary should actually go towards paying off EMI. All the EMIs, not just the home loan EMI.
Yes, I'm so glad you asked that question because, from a financial planning standpoint, I always say that whatever be your situation, ideally try and not spend more than 50% of your income across all EMIs. And if you need to spend all of that for a house, then so be it, because that is the most important asset that you're buying in your life. And let the car can wait, the other music systems can wait, every other EMI can wait. But the home loan EMI is, of course, top priority. So there you go, 50% is what you can do. Now, typically, how much loan will you get? Let's start with that question of yours. So if you're earning 2.5 lakhs a year, which is approximately 20,000 a month, then the max that a company would sort of allow you would be somewhere in the range of about 10,000, and which works out to a loan of somewhere in the range of 9 lakhs to 11 lakhs, depending on the rate of interest prevailing. And typically a 15 to 20 years tenure is what I'm assuming. Now, so that's your loan. Why do you get a lower loan? Because obviously the loan that is allotted or loan that is sanctioned to you is based on your repayment capacity, your age, the number of years you have to work, so on and so forth. And of course, needless to mention, your credit score. Now, all these things go into deciding the loan amount that you will get. But the largest reliance of your loan amount is based on your repayment capacity. And nobody would want you to pay more than 50 or 55 or 60% of your income as EMI, because beyond that, you may not have money for your own lifestyle, money for your living expenditure. That's why funding institutions would cap your EMI somewhere in the range of 50, 55 or maybe 60% of your income. So I hope all that helps.
Right. And as far as your question on interest rates are concerned, Keval, I'll ask my producer to pull that up again. We have been running those graphics over there, which with the interest rates, and I guess that should help you a bit. 9.35% is the lowest interest rate currently being given at the moment, and that is being given. Those are home loans that you get from the State Bank of India. The other rates are up on your screen over there. M. Ravi has dialed in from Delhi. Ravi, how can we help you?
I have just two questions. One is the interest rate, if we take a home loan under section 80E, say that 2 lakhs cap is there, no? Say 2 lakhs and then the Hello?
Yes, Ravi, we are listening.
2 lakhs cap is there for the self-occupied house.
Yes.
Yes.
And then say and then the full amount which is being deducted as interest, that is also say can be claimed as a interest part.
Right.
Say in that say what is the clarification regarding 2 lakhs and then above 2 lakhs, the whole amount of the interest?
So basically, he wants to know about tax deduction on home loans, Kartik.
Tax deduction.
Right.
Deduction.
Yes,
and
that's
then
right.
Second question is my wife had bought a house in 1998.
Okay.
And then she got tax claim, interest claim during that period. So 2005 when it was introduced to 30,000 rupees. Now whether she is eligible to claim interest amount if she buys a house in her name.
Okay. Kartik?
So, Ravi, I'll answer both your questions together because they're all interlinked with one another. So the clarification is this, that there are two types of houses as are classified by the Income Tax Act. So one is the house in which you are living, or which is known as your self-occupied property. If you are living in that house, or which you are calling as your self-occupied property, on that particular property, the maximum interest deduction that you can get is 2 lakhs, and that is under section 24 and not 80. That is one. Second is, if you want to claim a larger benefit, then that is possible in the property which is your second property, or which is known as a leased out property. So a lot of times we buy property from the perspective of renting it out and earning a rental out of it. So on that rental property, you can earn whatever rent you are earning, and from that you can deduct the entire interest component. Even if your second property, which is known as the deemed let out property, if it's not let out actually, even then in that case the entire interest that you are paying on that can be claimed as a deduction. So that is the clarification. It has to be your second property, but on your primary property it's only going to be 2 lakhs. On every second property or deemed let out property as it's known, you will get more than 2 lakhs to whatever is the extent of your interest payment.
Right. And Kartik, one more clarification over here.
Yes.
Say I'm living in a property right now and I
Yes.
buy another property. Now, currently the one that I'm living in is obviously my self-occupied property.
Correct.
But say I move into that other property 3 years down the line, then obviously the purpose for which you're using the property changes. So can you also change that as far as tax deduction is concerned?
Absolutely. So you can choose to offer one of the properties as your self-occupied property and look at where it is beneficial to claim a larger offset of tax, and therefore you can make that as your deemed let out property or your second property. But you cannot flip this every year. Once you go into a particular mode, then you need to go and continue in that mode for a long time, because if ever your papers are pulled up, then you will have a huge tax bill. At the same time, you will have defaults, penalties, interest, and all of those things which are possible. So be very sure of what you're doing. Once you switch, it is not like a situation where every year you can choose which one to report. So it has to be one of the two, and you
Right.
stay with it.
Right. So you need to stay in that property for a significant amount of time. Parimala has called in from Hyderabad. How can we help you?
Hi, Kartik, and hi, Miss. I didn't
Hi.
get your name. My question is, like, my son is an NRI, and he has availed HDFC housing loan for purchase of a flat. And then we have not got any tax benefit for him. So do we get any tax benefit for him? Because I'm a taxpayer, I'm a government employee. Do I get any tax benefit for the loan he has availed?
This is your son who's availed the loan, right?
Yes. He has purchased, he's an NRA.
Okay.
And then we are paying a huge amount of EMI. So we have not got any kind of a tax benefit for the loan that he has availed.
Parimala, have you signed the loan agreement along with your son? Are you a
not at all.
co-applicant?
I'm not a, co-loaner, or I've not borrowed any loan for this property.
So it's a loan that's completely solely taken by your son, but you are paying it off.
Both of us are paying, but
Okay.
he's an NRI, and then we don't get any tax benefit, right?
Right.
So.
Yeah, Kartik, obviously the one who pays it gets a tax benefit.
Yes, pretty much the answer is already there. Parimala, see, what's happening is it is important for you to be the owner of the property, as well as it is important for you to be the co-borrower in that property. Then in that case, you would have definitely got all the tax benefits. Now, see, there is no reason why a non-resident Indian should not get the benefit. If you are filing his income tax return, you definitely can put the benefit, and you will get what is known as a negative income. But what will you offset it from? So there is a benefit of interest, but if your son has any other interest income or any other income through any other mode of business, profession, operation in India, then his returns will have some income and you will be able to offset this interest payments. So there has to be some income to offset it. In the absence of any income that your son has, this will simply stay as a loss of property. But I still suggest you file the returns, accrue it. So some point of time, in case he comes to India and then has income, you are able to carry forward such losses. What happens in your income tax return is this will be treated as a loss of income from house property, and that you can carry forward for a few years. So that benefit may be available to you, but obviously in future years, whenever you have future income.
So Parimala, essentially the answer is this: you need income to claim deduction. Okay. Right now your son doesn't have income in India. His income is he's actually earning an income abroad.
Yep.
So if he has income in India from stocks or from whatever else that he's owning, then you can offset it, then you can claim deduction. If not, carry it forward. If he does come back to India, he can actually claim like a bumper tax rebate over there. Anil Malik has sent in his question via email. Now he says that he owns property in Ghatkopar. He is the owner and has Pagdi tenants. If he takes the help of a project management consultant, can he get a bank loan against the same property to redevelop this same property? He says he does not have enough funds on his own since the rent paid to him is very low. Now, it's not a home finance question.
Correct.
However, Kartik, I know that you're a lawyer. Can you help him out?
Yes, see Anil, I'll give you some basic guidelines on what you need to do. Yes, if developers are not interested, then you will need to do this funding yourself. Yes, you can go to a bank or to an NBFC who may be happy to finance you. But however, prima facie, there are a couple of things that you need to understand in this thing. Firstly, the project management consultant, as the name suggests, is a project management consultant. He may be a financial consultant and he may be able to help you, but that's normally not a rule. He is there mostly to take care of the project and to make sure that the project is going on smoothly with whichever third-party developer that you may have appointed. Now, you obviously also need to know that you'll need to have the consent of at least 70% of all your tenants before you also give your consent to go ahead and start redeveloping this property. Without this, nothing's going to happen. Having said that, there is of course a lot of procedural work, and there is of course a lot of rigmarole that you need to go through. And it's obviously a nice idea if a builder falls into this group of yours and then starts redeveloping it. If the current rules are not conducive or if the finance is not available, maybe put your plans on hold for some time. There is a new act which has come in, which is Real Estate Regulators Act, which would also help. Even builders will get a better clarity of what is expected out of them and what is not expected out of them. They're trying to figure all of that out. So maybe wait for some time, and then when the market picks up again, there will be interest in your property development. And that's a huge business all across Bombay. So I don't think there's any reason to worry. It will happen, perhaps a little later.
Ghatkopar is a prime location. I'm
Indeed.
sure you'll find enough takers over there. Also, he asks if he can get a loan against the existing property. But there's a bit of a problem over here because obviously this is property that you're going to tear down and then rebuild again. So will a bank lend?
Yes, the banks do lend. So what happens is you become a self-developer here. So the mortgage that you're offering or the collateral that you're offering is 2-3 things rolled into the whole project. Firstly, of course, your land on which you're going to build this thing. What also happens is the lender will ask you to open an escrow account, basis which as soon as you start launching your project, all the money that comes in will go into this escrow account to make sure that it is only used for that particular project and nothing else. That way, even the lender has some sort of a control and he's monitoring what's happening. So it's not impossible. It's a very usual thing. That's what established builders do all the time. It is known as construction finance, and that's typically the parlance that is used within NBFCs and banks who actually provide loans to builders. So what's actually happening is you're going to become a builder yourself, and therefore if other builders can get it, why not you? As long as your credentials and papers are good and clear, your title is clear, your property is absolutely good, you're yourself in good financial standing, so on and so forth.
Right, Anil, and one more thing before we move on. Now, we've done a couple of shows on redevelopment, and what we've learned is this, that there are some cooperative banks that are out in the market who are willing to fund societies who are, looking to go in for self-redevelopment. So, I suggest go to the market and talk to a couple of these cooperative banks. Chances are you might just get yourself a good deal, right? Facebook query next. Praveen says that he wants to book a flat in pre-launch. Now, he wants to take a home loan for this. He doesn't want to opt for pre-EMI. He wants to know if it is possible for him to start his EMIs after possession and pay the interest and the principal amount together. He wants to know how the bank will collect interest from him after he starts paying the EMI. He also wants to know if he'll be charged extra for choosing this option. Kartik, I don't know where he's writing in from, but ideally, on the channel right now, we are not advising anyone to go in for a pre-launch project. It's really not a smart thing to do in this particular market. Also, he's talking about paying the entire EMI after possession, which I don't think any bank will allow, will they?
Yeah, see, there are two things here. Obviously, you're absolutely right, Kavita. This is obviously not going to be allowed, because as soon as you take a disbursement from any lender, right from the day that you've taken your disbursement, your interest starts accumulating, and therefore you have to make a payment. You of course have the choice of making just a pre-EMI payment, just pay your interest, or a lot of people actually choose to start paying the entire EMI. What happens as a result of that is a big chunk of the principal starts getting repaid, and which is quite advisable and quite a nice thing to do. Now, having said that, with a pre-launch project itself, now you don't know how much time it's going to take, so you need to really proceed with a lot of caution. Even the new act says that as soon as you make about a 10% payment to the developer, which is something that you'll have to in any case do as part of your down payment, which is about 20%. But as soon as you make 10% to the developer, you'll have to sign in an agreement. You'll have to register your agreement, pay the stamp duty and all of that. So, you better be sure that the pre-launch is actually getting launched very soon. Otherwise, there could be a considerable delay between pre-launch and launch. and that way a lot of your funds will be stuck, and you will have to anyways pay 20% from your own resources, and thereafter the bank will come into the picture. And as soon as they come into the picture, you need to start paying your interest right from day one. There is no moratorium period, or there is no waiting period, so you don't have a choice. If you're going to borrow, you'll have to pay.
And in fact, no bank will lend to him without an agreement, without a registered agreement.
That is an absolute mandatory requirement, because the only way the bank creates a charge on your property is by doing is by holding your agreement, and that is known as what is known as an equitable mortgage. So they are going to hold your agreement as a collateral against your property, so that you don't go ahead and try and sell the property basically.
Right, and another thing that you need to remember, Praveen, is that as a home buyer, it is your right. Even if you're paying 1 rupee to the developer, you need to get an agreement and you need to sign the agreement. That is your right. That is guaranteed by law. So if the developer is not willing to sign the agreements, and let me tell you this, that in the pre-launch stage, you won't see too many agreements being signed, then you're probably better off not getting into that project in the first place. Virendra Sharma is on the line from Gurgaon. Virendra, how do we help you?
Hi, ma'am. Can you hear me?
Yes, I can.
Okay. Hi, everyone. Virendra here. Okay, my question is actually related to another second property which I purchased. The first one, I'm currently actually staying there, and I'm claiming my income tax benefits there. For the second one, which I bought in 2011, but the position has not been given so far. My question is related to income tax benefits. When and how I will be able to claim, with the respect of the principal and interest which I'm paying.
When can he claim tax benefit on an under construction property?
So, the answer, Virendra, is for you that as soon as you get possession of your property, you will be able to be in a situation to start claiming your tax benefits. What happens, however, in the interim period is for all the payments that you are making, they get aggregated, they get accumulated. And once you get your possession, then in the next 5 years, which is to say that in the next 5 installments or 5 little parts of your total interest payment, you get this benefit, and you get to amortize it every year. So every year you use 1/5 of the benefit, and the benefit of that particular year also, so long as you are within the ambit of 2 lakhs if you're calling it your self-occupied property, and if you're calling this as your deemed let out property, then of course you'll get a much larger interest benefit. But the ones that you've paid before your possession can only be broken into 5 parts and then distributed across the next 5 years.
Now, Kartik, a lot of projects, and especially in the NCR region from
Yes.
where he's calling, are delayed. Now, he himself has bought this property in 2011. We are in 2016, which means it's 5 years in the making. So obviously, he will be at a loss when he eventually starts claiming a deduction on the EMI that he's already paid, and he's been paying it for the last 5 years. He is going to be at a loss because he's not going to be able to finish it off in 5 annual installments.
Yes, that's right. So whatever is the excess interest paid, unfortunately, you can't do anything about it. Unless, of course, it's like we said, it's a deemed let out property. So then in that case, you have a higher bandwidth to take interest into your income tax return. But if it's your self-occupied property, and which is exactly the case with a lot of people, they will not be able to expire that benefit, and unfortunately the benefit lapses. You can't do much about it, and that's really a sort of a sad story that we keep seeing in NCR. There's so many projects which are stuck, and there are hundreds and hundreds of apartments which are either under litigation, or there's been inordinate delay which has been happening, and it's really unfortunate.
It is really unfortunate, and the sad part is that the tax department has not yet taken cognizance of all these project delays that are happening across the country. Another email query coming in, Suresh Chakraborty says that he has a home loan of 13 lakh rupees. He wants to know if he can pledge gold and avail a loan from the bank and pay back a part of his home loan. He asks if this is a good solution. Now, Kartik, this is a variation of your favorite question. Most people want to sell equity and pay off their home loan. Now, he wants to sell gold. What is your answer here?
Well, I know it's actually, it's a little tricky situation. Suresh, why would you actually want to take a loan on your gold and pay your home loan? Because you're not escaping interest. I mean, on your gold loan, if you've mortgaged or pledged your gold, you've got some money against it, but then you still have to pay some interest on that. And it's not going to be cheap. It's going to be pretty much market driven and, pretty much in line with gold loans. And I don't think you're saving an awful lot of money. So I would rather that if you have a lot of gold, and if this gold is like inordinately more than part of your net worth and your portfolio, maybe you sell your gold, convert into another asset, which is a growth asset. So typically we say that you should not have more than about 5 to 10% of gold in your portfolio. I mean, it's just an inflation hedge. So if you bought it from an investment point of view, maybe you need to reduce your allocation to gold, buy an alternate asset like an equity mutual fund or stocks if you like, let them grow, use the profits, and then prepare.
So clearly Kartik belongs to the camp that says don't buy gold. But he does ask you to buy real estate, which is a good thing.
Yes.
Ganesh tweets in his query next. Now he says that he wants to take home loan for an under construction property. He wants to know if the banks are liable to take any responsibility in case construction stops. I think you're going to be disappointed with Kartik's answer now.
Yes, unfortunately, Ganesh, as soon as you take money from a lender, whoever it is, you will have to start paying interest straight away. So even if the builder sort of runs away or stops construction, or the construction is stopped due to certain regulatory reasons, or due to some governmental body reasons, or due to some clearance not coming through, irrespective of anything, what happens is your EMI keeps going on. And of course, the bank does not take any responsibility whatsoever. In fact, this is the reason also when a lot of developers try to entice home buyers with the fact that we will pay your EMI and you don't have to pay EMI, we actually warn them to don't do that, because if something goes wrong with the construction, ultimately it's your liability and it's going to end up on your CIBIL score and it's going to end up in your balance sheet, because it's you who've borrowed or the builder has borrowed on your credentials. Whichever way it is, be very sure of what you're buying, and if the construction stops, you will still have to keep paying the interest and the EMI.
Right, and the other thing that you need to remember is that, a lot of projects, a lot of developers will put out advertisements saying that so-and-so project has been approved by a particular bank. But what you need to know is that, and this is what we've heard from bankers on this channel, that even if a project is bank approved, please go ahead and do your own due diligence. Do not sit pretty thinking that the bank has done its due diligence, so this project is safe. It is not a guarantee that the project is safe. What it means is that the bank thinks the project is commercially viable. It does not make it safe. If you are investing your hard-earned money in the project, if you are taking a home loan, if you are going to pay the EMI, it is your job to ensure that you do your due diligence before signing on the dotted line. Or else, just go ahead and buy a ready possession property. That's it on today's episode of Property Hotline. Kartik Jhaveri, thank you very much for coming in, answering all those questions. And if you have any queries related to real estate, it could be anything: home finance, legal issues, tax issues, or buying, selling and investing in property, get in touch with us. IDs flashing on your screens. We'll get the country's top experts to answer each and every single question. Thank you very much for tuning in. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.